Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tshepo Modiba, and thanks for joining me. Tonight, I'm joined by Dumi Jere, Chief Executive Officer of AfriCatalysts, for a closer look at where opportunities lies within the more than 90 billion annual infrastructure spending gap on the continent. Dumi, thank you for joining us.
Pleasure.
We're already approaching the end of first quarter, so I'm not going to say Happy New Year anymore. But again, thank you for joining us. Infrastructure, that's a space that we speak about regularly, I guess, around the framework of the continent. Are there opportunities? What are the opportunities for investors to participate?
So, I mean, when we talk of infrastructure, like you said, there's the $90 billion gap,
right,
across the continent, that is. But there are so many pockets that feed into infrastructure. So, right. I mean, we could talk about...
It's broad.
Exactly. We could talk about transport or rail or, energy.
Right.
And I think energy is where, opportunity is and where people should keep their eyes on in this coming year, 2017.
What's that a function of? Is that a function of that being an area that needs there's a lot of demand for energy, or what's that a function of?
Look at it this way. There is you obviously hear of different projections for different countries. Mm-hmm. This one is growing at 7% this year, projected at 8% this year, and so on and so forth. Mm-hmm. Now, for those countries to meet that speaks to the industrialization processes, and there's no way you can move the industrialization without the energy aspect of it. So once you solve the energy aspect of things, then it feeds into a whole lot of other things that are able to support fully that that growth projection.
Okay. Before we delve into the nature of opportunities, we've touched a little bit on energy. What are the vehicles available to investors to access these opportunities? Is it really via private equity firms? What are the vehicles available for investors?
So quite a number of governments are opening up to public-private partnerships.
Right.
So yes, of course, you've got an element of private equity.
Right.
And then obviously you can also tap into some of the funds that are being raised by governments. A lot of governments are embarking on quite a number of ambitious Eurobonds.
Right.
And so that's also an avenue where people can also look to for funds to develop some of these projects.
Right. Okay. Let's delve into, I guess, the opportunity set available. Where would you like to start? Where's there an area where it's ripe for pickings from an investment perspective?
I think we can always do West, East, and Southern Africa. So perhaps let's start with West Africa. When you look at West Africa, there are quite a number of players that are doing well. Mm-hmm. Senegal, your Cameroon, but the one that strikes me is Cote d'Ivoire.
Right.
And I think particularly because, when you look at the president, Alassane Ouattara, mm-hmm. Now he's a former economist with International Monetary Fund.
Right.
And his finance minister is a former Goldman Sachs trader. Now, these two economists, they seem to be on the same wavelength when it comes to economic growth. And now they have projected that they want to spend $60 billion across through the year 2020 and on various infrastructure, but the majority of that is going to be dedicated to energy. That government is coming with a backed track record, because in 2015 into 2016, they managed to grow the economy by about 6%.
Right.
For the first time, they surpassed 2,000 megawatts capacity in power generation. Right. To the point where they now export to Benin, Burkina Faso, Ghana, Mali, and Togo. So that's huge, and the opportunity is still quite huge in that country, particularly when you look at that figure of 60 billion. 68% of it is going to come from private sector, made up of about close to 80 public-private partnerships that we were talking of earlier.
And what sort of returns are investors looking at on that sort of money? Are you looking at double-digit return on investment?
Not necessarily. I think more than anything, investors are looking at the stability aspect of it.
Okay.
Because once there's an element of stability in that particular country, then guaranteed that there are returns that are going to come. Now, Cote d'Ivoire, I mean, enjoys one of the stable democracies in West Africa, so that's a plus, and that's one thing that investors are looking at.
Right. Beyond, while we remain in Cote d'Ivoire, beyond the energy sector, are there other avenues where investors should be looking at from an infrastructure perspective?
Indeed. There's lots of construction that's going on, particularly on the roads and rail sectors, and also by extension to Dakar. The big project that is being spoken of mostly in West Africa currently is the port that's being built in Dakar in Senegal, in an area called Bagni. So that speaks, it's illustrative of the grander story of the infrastructure needs that on the African continent.
Okay. If we move elsewhere in West Africa, any other countries that are ticking the boxes in terms of growth and infrastructure development?
Sticking to West Africa,
yes.
I would say maybe Nigeria.
Okay.
I mean, there's no way we can speak of West Africa without talking about Nigeria.
Of course.
And I mean, Nigeria, it's a bit of a conundrum, if you like, because it excites and frustrates at the same time.
Yep.
And they've got the largest gas deposits in the whole continent. Algeria, which is the second largest, is included in the top 10 global gas producers in the world, but Nigeria is not.
Yeah.
Now, the government is doing what it can to change that outlook. Recently, the Electricity Regulation Commission increased tariffs for commercial, industrial, as well as residential use.
Right.
Obviously, that's very attractive to independent power producers.
Of course.
But the downside of it is local Nigerians are saying we're not necessarily against increases in tariffs, but give us more affordable energy. So what you remain with is a catch-22 situation where the potential investor now has to hold back because they are not sure whether they can recoup their return on investment.
Is that actually, before we continue with the Nigeria discussion, is that broadly speaking an inhibitor to investments within the energy space on the continent? Because a lot of countries do have regulated tariffs, and it's not a free market in terms of electricity prices. Is that an inhibitor to further investment on the continent? And is that something that needs to change?
Yes and no.
All right.
It's an inhibitor because, I mean, the higher the prices, the more attractive it is for the potential investor.
Of course.
No, in the sense that even though the prices may be regulated, that's a situation that we find world over anyway.
Right.
Prices are regulated everywhere, but that doesn't stop potential players from coming in. So the fact that African governments are doing it shouldn't really necessarily stop the potential investors from coming in as well.
Right.
So
it's a yes and no.
Correct.
Okay. Going back to Nigeria, what is the outlook? How likely are we to see a ramp up specifically in the energy sector? And then from that, spilling over into other infrastructure?
Well, we are close. Like I said, the government is making efforts. So obviously there's a bit of haggling back and forth that's going on between the Electricity Regulatory Commission as well as and the public on one hand, as well as the investors on one hand. But ultimately, the government understands that for further development, for them to achieve their growth projections, then they need to address that problem first. Because many of the companies in that particular country, they roll out generators. What is the word I'm looking for? They fund their operations through generators.
Yes, which is quite expensive.
Exactly. So if that was addressed, then it speaks to a whole lot of other things. The cost of goods can actually also come down.
Right.
So they are doing the bit that they can, in an effort to address this challenge.
Okay, let's move east of the continent. Traditionally, a hub that's doing particularly well. I know economically there's good integration. What are we doing? What are we looking at from a regional perspective? How well is this region doing from an infrastructure perspective?
Yeah, funny you say that. Just as I was getting here to studio, I was reading an article in the Forbes Africa magazine.
Right.
That was talking about Uganda having just discovered about 6.5 billion barrels of oil.
Right.
To the border close to DRC, as well as Tanzania has got about 60 trillion cubic feet of gas deposits.
Right.
So when you just look at that, that speaks to a whole lot of things. Now, when you zoom back to Uganda, they decided to take the oil pipeline through Tanzania,
right,
as opposed to through Kenya.
Yeah.
Now, it would have been much cheaper had they done it through Kenya, but they cited things like the Al-Shabaab attacks and all of that as their reason for going through Tanzania. Now, that increases the cost of the energy generated by the time it reaches Uganda.
Right.
Then on the one hand, in Tanzania, you're looking at President Magufuli, who's implementing quite a number of austerity measures that are intended to boost the infrastructure of not only his country, but the region as well. So all of those factors, they have a bit of impact on the eventual costing of the energy generation from those two countries.
And what does that mean then from an attractiveness perspective? Should investors then be looking at this as a slightly, I guess, worse off investment than you would be in West Africa?
Not necessarily, because so you look at Uganda. Uganda currently, what's servicing them is two power plants,
right,
or hydro. They're using hydro, and then you've got the Mtwara gas project in Tanzania.
Right.
Now, both those, not both, but all of these projects combined together, they are not enough to support the 6 and 7% projection for Uganda and Tanzania, respectively, for 2017 and 2018.
Right.
So they are not enough.
Right.
So you still need other players to come in. The region is still attractive because, again, it's one of the most stable regions when you compare it with south, east, as well as north. So that's a major key attractive element for people to consider.
Okay, so the demand side of the equation is definitely there, stability is there. Is a concern then the potential lag from investment to, I guess, starting to reap back some sort of profitability?
To an extent, yes. Because, obviously most of these projects, they take a long time to mature. Right. And now, with the long time comes different political situations, different governments, different presidents, and so forth. And this one will change what the other one was doing, and all of that. Right. However, what's likely to work in favor of the East Africa is the stability that has been maintained, the smooth handover of power from one government to another, and so that's likely to entice investors to put in the required resources in it. Perfect.
Let's leave it there. Thanks to my guest, Dumi Jere, Chief Executive Officer of AfriCatalysts. That's all from Buy Africa this week. Remember to follow me on Twitter. That's at Modiba_Tshepo. And send us your thoughts about the show using the hashtag BuyAfrica. From myself and the team, goodbye.